And Rapid Ratings Executive Chairman James Gellert, it's great to have you back. Welcome.
It's good to be back with you.
We're going to start with the big story of kind of the month, the year so far, which is Boeing. And what's interesting to me is not to ask about Boeing, proactively now after the challenges they faced from this aircraft going back to Friday, and now the FAA is investigating. But you guys had actually spotted some issues beforehand. What do you see going on here?
Well, our ratings, the financial health rating, is an indicator of default risk over the 12-month period, but our core health score, which looks out 2 to 3 years, is evaluating how efficiently a company is run and how well it's positioned to withstand shocks. And if you look at those two things together, it's a dynamic that doesn't paint a pretty good picture for Boeing. They've been declining in ratings since 2019.
Which was when the stock price and the market cap peaked, by the way.
Exactly. And they currently have a financial health rating of 35 with a core health score of 18. Now, to put that in perspective, over the last 20 years, over 90% of companies that have failed have been at 40 and below.
Wow.
Now, that isn't saying Boeing is about to fail. And certainly if a company is going to get government support or is going to...
It seems unimaginable we'd even be talking about any kind of default risk here.
It does. Particularly in this market environment where it was just a few years ago that they came to market and raised $25 billion in one shot.
Wow.
So a lot of the Boeing story is the same story that we see throughout the market for public and private companies, that companies have been able to sustain themselves with relatively easy and very cheap access to capital up until now. And Boeing is a great example of a company that has been able to sustain itself, though.
And by the way, I mentioned the FAA is now investigating that incident. Boeing itself is out with a statement saying we will cooperate fully and transparently with the FAA and the NTSB on their investigations. Anything further you would add here? So what should investors do? A lot of people have said, okay, maybe now this is an opportunity to get long a stock that will have to repair itself over the next few years. I don't know if there's anything you'd add.
Well, they probably would have said that in 2019.
They did.
And so here we are. I think it's a wait and see, unless you have an extremely long time horizon.
All right. Well, fair enough. Let's pivot, talk some shipping now. We were just speaking about this with our last guest about the conflict in the Red Sea, which actually has been sending some of the shipping names higher because the rates they can charge are so much higher. There's one name in particular, though, that you've said could be more exposed here. And tell us about that.
Well, in general, the shipping companies, you're right, have done very well, and particularly post-COVID, where many of them improved in their ratings. Their resiliency to this kind of a dramatic problem has been really strong. So most of the shipping companies, the Maersks, Costco's and so forth, are in the 90s. Zinn is lower. Zinn's in the 30s. And it's a combination of indebtedness, combination of lack of profitability. And I look at the shipping industry, and really what I see today isn't so much the problems with those entities, it's the problems with the entities they're serving, because they are in the supply chain of so many companies that are going to be affected, not to mention global growth, inflation, and a bunch of other things that could be affected negatively by this.